I honestly think the audit competition was one of the best return on investments that we did because you create this prize pool and you have the auditors compete for it, but it's also time bounded. And the results just for us were really surprising. We found things that we weren't expecting, things in code that we thought was bulletproof, and then we saw issues in it that had gotten by other auditors. And, this was just really, from everyone we talked to, par for the course, right? No one is sort of perfect. No one can find everything. And we really want, a mix of depth and breadth.
Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
Welcome to the Edge of Show. I'm your host, Josh Kriger, and we feature a variety of top-notch guests and other hosts as well. It's another production of the Edge of Company, a quickly growing media ecosystem empowering the pioneers of Web3 tech and culture and responsible for other groundbreaking endeavors like Outer Edge Innovation Festival in LA and Riyadh, as well as the Future Money Governance and Law Summit coming up in Washington, D.C. just next week or maybe after this airs. Today's sponsor show features William Fey, the founder of Ammalgam, a protocol on a mission to redefine DeFi by merging lending and trading into one seamless system. With a background in mathematics, software engineering, and crypto markets, William's leading the charge towards capital-efficient, resilient infrastructure and gearing up for a major mainnet launch on Sonic very soon. William saw each other briefly in Singapore. That was a fast-paced week, if there ever was one. It's great to have a little bit more time to hang out together on the show.
Absolutely. Yeah, excited to have a chat.
Yeah, so you're back in your home base, which is where?
I'm in Denver.
That's right. It's getting a little chilly.
A little bit, yeah, off and on in spurts.
Yeah, I'm in DC and I had to put on a sweater for the first time I think in a year. So I'm acclimating slowly but surely. Uh um, but in the meantime, uh let's just talk about the core vision of Amalgam. You guys have sort of tried to reinvent DeFi towards sort of a more sort of I guess inviting unified landscape for the world in terms of, in particular, this mix of both lending and trading. And I'm curious sort of how you feel about the significance of that convergence now relative to when you got Amalgam started.
Yeah, it's an interesting question. I think there's actually a lot as a founder that sometimes you can get caught up with of like, is this unique or is it, sort of, recycling some ideas and there's definitely some things in Amalgam that have remained very fresh in the sense that like no one I think has been able to solve the problem specifically of like permissionless lending. And so there's been a few attempts that I don't think were very successful. And so I'm really excited about that aspect of what we're doing. And then there's some other aspects that are not completely unique. Like there's other protocols that have done things that are similar, but not so much of that, all of that innovation in multiple aspects being, in one protocol, which I think is very unique of not needing to bundle or, use multiple UIs to do something interesting.
Yeah, I can definitely appreciate that. I'm wondering if there was like a market shift or inefficiency that sort of you observed that made this opportunity come to life for you?
Yeah, it was a mix of being really curious about some of the research that was happening in the space, but also being a user. And so during the period of time that I was ideating and before Amalgam was a thing, I was actually doing delta neutral market making strategies on chain. And a lot of it was just trying to farm yield for stable coins. And it was based on the observation that, um, at the time, it was like 2021 during DeFi Summer, like yields for stables were pretty high. There's a lot of that was being generated from Terra, but there was also those same sort of really high rates on Compound. And then I was farming those rates, trying to get yield, and then seeing that like also the cost to borrow ETH was really low, and I had the idea of like, well, what could I do with the ETH to make money, right? That would cover the cost to borrow it. And so then I would borrow ETH and then I would take some more stables and I would market make with those assets. And then basically gave me no exposure to the ETH really because it was borrowed, and also gave a higher return than the cost of borrowing the ETH. So it like sort of generated more yield than what I would have had if I just had money in Aave or Compound. And so this was maybe something a little bit more complicated than most DeFi people used. But having done that and then seeing some of the research, specifically, there's a paper by Tarun from Robot Ventures and Gauntlet talking about the combination of DEXs and lending protocols. And as I read that, I really understood this domain as both a user and sort of thinking about it from a technical perspective. And I was like, I think there's more here. I think we can push the boundaries further. And in that, thing that I think that really funny today, going kind of piggybacking off your last question, is that all the concepts in that paper from 2021, 2022, I can't exactly remember the date it came out, have been recycled over and over again. But what hasn't been done is people haven't taken those two things and put them together, right? And the two things being building a lending protocol on a DEX or building a DEX on a lending protocol. Those two trade-offs are what sort of are presented as concepts that could be done or were being done back then and during DeFi Summer. And we still see more and more of these products being pushed out on that same premise of either doing one or the other. And Amalgam, really, we wanted to just avoid that choice and integrate them completely. So there wasn't one built on the other or the other built on the one, but completely unifying the design so that it was both a DEX and a lending protocol.
And how is that different than like central exchanges that offer, the ability to lend and to trade?
Yeah, I mean, that's a good question. I mean, there's obviously the centralized versus decentralized piece where you have the custodial aspect, but I don't think that's quite what you mean. I think more importantly is that that lending is one product and the trading is another product, and how behind the scenes those things work together is I'm sure it depends on each exchange, but they're not integrated. And so what that means is that specifically in our design is that if you're market making, you could be earning swap fees and trading fees at the same time. Whereas a market maker on a centralized venue is probably doing something more creative or more technical, which is fine. And, order books allow for that technical sophistication. I think the thing that I saw in especially DeFi Summer was that Uniswap created this product in Uniswap V2 that was allowed this type of return or this type of trading to be accessed by a much bigger audience than sophisticated, market makers on chain or on a centralized exchange. And that was, I think, a huge innovation, and there was a really explosive, growth eventually once people really understood it, especially during DeFi Summer and all the different new coins coming out and being able to have trading access to them on chain immediately. And so I think V3 sort of made things more complicated and went back towards a centralized, like, hey, I need to be, doing really complicated engineering or have a very sophisticated setup in order to market make on chain. Whereas the market making on Uniswap and Ammalgam will be passive, where you don't need to be a sophisticated quantitative prop shop in order to compete.
Yeah, that makes a lot of sense, and I appreciate you unpacking the difference here. I mean, it's a level of integration that's fairly unprecedented. It almost seems like you're creating a new category, like we could call it like I don't know, DeLEx or something. Have you thought about like how to call this convergence?
Yeah, I mean, we use DeLEx as for the Decentralized Lending Exchange because it's both a DEX and a lending protocol. And it's always hard to add new vernacular to the space, but that was something that we coined.
You got to if you add something, you have to take something away. So you have to like kill your least favorite acronym now.
Yeah, I'll have to get back to you on that. Maybe we can, decide between AMM and DEX and throw one out.
Yeah, I mean, look, if you can replace Dex with DeLex, you're onto something, my friend. You got your mainnet launch coming up in December on Sonic. Congrats. And you've been doing live beta testing in the wild, which is it's always fun. And I feel like with that type of environment, there's always some surprising things, lessons learned, uh, interesting user behaviors that come up. What anything that like comes to mind that has sort of given you guys some maybe some rethinking things or tweaks or whatnot?
Yeah, I mean, it's a mix. We've gotten a lot of positive feedback. I think even, you mentioned the Sonic backing that had that developed the summer. One of their the feedback that they gave us was that they just really loved the UI. It was looks very slick. It's easy to use, and all these things that came out of, I think, an earlier iteration of feedback when I was pitching VCs and everyone said, this is too complex, none will get it. And so we just really leaned into that feedback and designed everything to be as simple as possible to make that complexity sort of not feel overwhelming to the users, right? And so I think we've done an excellent job with that. And then on the other side of it, I think that the really the feedback that we've gotten on, say, maybe the more critical side has been things that have been super helpful that were either things that we didn't realize, or maybe we did realize and we didn't have time to fix them, but we got, confirmation that our idea of what would be better also aligned with users, right? So either confirming things that we already knew we needed to improve. I think there's some click friction in some of the more complicated strategies that we have that we're working on to make as smooth as possible with as little, on-chain interactions to get to the final result. And then yeah, so I think all of it's helpful. The more feedback that you can get, the better product you can make.
Yeah, is there a particular level of expertise on trading in terms of a target customer that you're focused on, or is there a range there? And how do you develop a sort of product like this to be both sophisticated enough for an advanced user, but not intimidating to someone that might understand the fundamentals to do this, but doesn't doesn't have the same nuanced capacity.
Yeah, I mean, the thing that I've learned over and over again, and it's almost like getting your hand slapped repeatedly, and eventually it makes sense, is like you really just need to make things as simple as possible, right? And I think I am not, my first intuition is not to make something simple. My first intuition is to think of things and put them together and sort of build Legos, and, build all these things. And a lot of people don't get it, right? And so, um, once again, back to the design process, like that was some of the feedback that we got from some of the people that weren't interested in our round. And we leaned into it and we made a UI that I think is super simple to use and very easy to um, use for the most basic understanding of DeFi, right? I just want to put in USDC. I just want to put in Bitcoin. So we've already put a ton of work into that. We're gonna, put another repetition into going further with that to simplify it again. To just have a single asset vault that we manage, similar to like what perps platforms like Hyperliquid do with HLP vault. So yeah, simpler the better. And then I think the more sophisticated stuff is, my hope is that we've made it accessible for people that want to learn more and want to be better traders and learn more about these things. And I think it's kind of an open-ended question how big that market could be, but sort of trying to leave as many breadcrumbs to make it simple for people to go from maybe just simple trading to doing more sophisticated trading.
Yeah, I think this is a aspect of the industry that's so important and we're getting better at, but it's a work in progress. For our listeners at home, Will's got this crazy set of two whiteboards behind him with all sorts of mathematical calculations that are over my head. And I guess at the end of all that complexity is you boil it down to something beautiful and simple and then people like it, and that's where the real joy in the industry and building technology is, right? Is to take that complexity and boil it down. So um appreciate your sharing your perspective on all that. And of course there's a security component to all this too. You just finished your audits with Cantina and Chain Security, and I feel like from talking to some security experts at Token, um, there's always a new bar for that aspect of our industry, especially with quantum coming and the sophistication of hackers. What was this experience like for you? And do you have any sort of insights from it that might be different than how you've had to approach security in the past?
Yeah, so I think the thing that I realized early on with security is that you could basically spend infinite amount of dollars, right? There's, every audit cost is expensive. There's multiple auditors. Some teams have, done 7 audits and they had much bigger treasuries than we were working with. So I tried to find this balance between getting the most bang for our buck by really trying to find the right auditors. And then B, I think there was this period in the fall where, actually, I'm sorry, there was this period in the spring that we saw the results from our first set of audits, and we just were like, this doesn't quite feel like we're ready, right? We need to respond to this and we need to do more. And that's when we pulled in Cantina. We did the audit competition. I honestly think the audit competition was one of the best return on investments that we did, because you create this prize pool and you have the auditors compete for it, but it's also time bounded. And the results just for us were really surprising. We found things that we weren't expecting, things in code that we thought was bulletproof, and then we saw issues in it that had gotten by other auditors. And, this was just really from everyone we talked to, par for the course, right? No one is sort of perfect. No one can find everything. And we really want, a mix of depth and breadth, right? And so our first auditors were really depth. They understood the protocol, top to bottom, spent a long time understanding the trade-offs, but missed this like low-hanging fruit that may have been, obvious to somebody that wasn't going as deep. And then the Cantina audit was much more of a breadth of review. And so we think we found a good balance. I think engineering in general is just trying to, find the balance between budget and, results. And that was kind of that was my experience in it.
Yeah, it's a really refreshing and insightful perspective on security. It makes me further appreciate the entrepreneurial sort of risk and um ambiguity that comes with building in this space, because my immediate reaction when I hear that is like a slight sense of overwhelm, because if you found that, what else is there? And you could just kind of keep looking under rocks forever and never launch something, but that stifles innovation. So I think it sort of goes to the point that there's no project in our space that is 100% infallible. I mean, there's concerns about hacking Bitcoin, right? So at the end of the day, you just do your best with the resources you have, and it feels like it's as much of a science as it is intuition.
Yeah. No, I think there's absolutely an art to it, and trying to balance those things. If your product is perfect, you've waited too long to launch. But unfortunately in Web3, we also have the fact that, immature products can really have a huge expense, right? They can lose money for users, they can ruin reputations. And so, balancing those two things is definitely really difficult. And especially if you're doing something new and innovating, right? It's not just a copy pasta of, some other protocol that's been audited sufficiently where you're adding one small nuance, right? This is something that we've really redesigned and built an entire new lending primitive that really breaks the mold in so many different ways.
Totally. Let's take a pause to shout out one of our favorite partners. For tech innovators facing legal challenges, Zuba Lawler is your go-to law firm. They focus on understanding your technology and business model before addressing legal requirements. Specializing in blockchain, AI, VR, AR, quantum computing, and more, Zuba Lawler offers expert guidance in capital raising, IP transactions, M&A, litigation, and compliance. Visit zuberlawler.com, that's ZUBERLAWLER.com, for cutting-edge legal solutions. So, Will, let's circle back to some of the features and functionality of the DeLEx that you guys have assembled. And one particular area I wanted to dive into a little bit more is this concept of dual purpose pools. Can you break that down for us and maybe sort of amplify why that's so significant in terms of differentiation from previous products that are out there?
Yeah, the dual purpose pool was a description I came up with to just say that, like, how could we use these assets in the most efficient manner, right? And in our setup, I think it's not completely unique to have DEX that has lending fees and trading fees at the same time. But the inefficiencies are that, say you're building a DEX and you take some of the assets and you put them in Aave. Well, Aave is not using 100% of those assets. It's lending out, 60, 50, 40, depending on the asset. It's only lending out a percentage of the assets, right? And then on the DEX, you're not using all the assets either. You're only really using the assets that are in a range near the current price, right? As the price moves up and down. And so the dual purpose nature, or the dual, and why we came up with dual purpose pools, is that we eliminate that inefficiency, because although we don't lend out 100% of the assets, we're lending out much more in comparison to some sort of design where you're taking assets out of the DEX and putting them into a separate lending market that has its own inefficiencies. We're lending out 100% of the assets in the DEX that aren't being, that are there at any given point. And so this reduces inefficiencies significantly from anything that's designed built on top of, where the DEX and the lending protocol are two different separate protocols, where the DEX is just trying to be clever with how it uses the lending protocol, if that makes sense.
Yeah, so essentially you're eliminating some of the fragmentation that comes from trading and lending, and maybe sort of aggregating the dust, if you will, from those transactions. It feels like, from my layman sort of vocabulary.
Yeah, exactly. It's hard to wrap your head around, but if a DEX is using, say, 80% of the assets are being put into a lending protocol, then you're losing the efficiency about 20%, right? And then the lending protocol might be
Wow, I mean
another,
that's a lot, 20%.
right? And then the lending protocol loses another, 40% of efficiency because it doesn't lend out all the assets. And so instead of having two steps of inefficiency, we just have the one, right? And so, that could be significant savings.
There's one more feature that you've talked about before, and I just want to zoom in on this show, which is impermanent gain. And this is another term. So you're going to have to eliminate several terms from our blockchain vocabulary. Will you just keep coming up with new terms? What exactly is impermanent gain, and why is it more relevant today to the concept of liquidity provision than impermanent loss?
Sure. Yeah, impermanent gain was trying to take just a one step away from something that people already know, which is impermanent loss, right? And although maybe people know the term impermanent loss, I think is something that people don't really understand very well. And but essentially it's this idea that when you're market making, the further the price deviates from where it started, there's a loss that gets created, and as the price, say, reverts back to where you started, it goes away. And so that's the impermanent part, right? It only is there for, yeah, as long as the price doesn't revert back to an area near where you started market making. And there's another concept in trading that often, the idea of longing and shorting, right, is that shorting is sort of doing the opposite of longing, and you create a short usually by borrowing the asset that people are longing and then selling it. And so and then what happens, you invert the payout, right? So if you're long, the payout sort of starts in the bottom left corner if the price goes down, and then it goes to the middle, and then it goes up if the price goes up, right? That's the payout chart. And when you short a market making position, you do the same thing. You invert the payout. So instead of, diverting from the price resulting in a loss, when you divert from the price, it results in a gain. And so you can create things like straddles and very like option like payouts that you would see or be familiar with if you were an options trader. And the reason this is interesting, I think, is multifaceted. But for one, is I think the important thing about market making in general is that there has been this narrative that market makers aren't making enough money on chain, right? The yield is not high enough for the risk, and that's very much true, I think, in a number of markets. But if you accept that as a truth, then the opposite should also be true, is that shorting that should be very profitable, right? Is going against that position should be very profitable if it's not profitable to market make. And so by creating this exposure, being able to borrow the market making position, you actually let the market price this exposure in a way that's currently not possible in DEXs today. And I think that's a very powerful incentive, because now letting the market decide what the price should be should make it more profitable in those situations where it wasn't profitable enough, and say maybe even less profitable in situations where maybe it was too profitable, right? And so anytime the market is able to, have a new lever by which to balance, two views of the market, you create efficiencies for the entire market.
Yeah, that makes a lot of sense, and I think it is a relevant term for where we're at today with the DeFi space. And taking a step back, there's been so much interesting regulation shifts, not just in the United States, but globally. And we've got on-chain treasuries, and we're going to be meeting in DC, I think, before this show airs, and talking about this convergence of traditional finance and DeFi that was more of an aspiration even a year or two ago. And now we have big players like Franklin Templeton investing in our space, products like BitLayer that does, Bitcoin yield. And I'm just kind of curious, as we look at the broader landscape of this intersection, where you feel like Amalgam fits in.
Yeah, I mean, I even think about this has been coming up for us recently, thinking about sort of our strategy for vaults and how we want to make it as easy as possible for people to put money into our protocol without necessarily having to understand the complexities of, I'm throwing out terms like options trader, straddles, and stuff like that. Like, and the more is simplify it. And essentially what I think is developing on chain, especially around products like Morpho, is sort of this pseudo hedge fund market where I just sort of trust some curator with my assets, and they lend it in some interesting way and create a return. That's really a very basic strategy in traditional finance. And I think that as things develop, what we're going to see is more sophisticated trading strategies being offered to users that potentially have higher yields, but also higher risk. And I think as that develops, Amalgam becomes a very interesting tool, because it sort of serves so many different market viewpoints that some hedge fund manager might have, you know?
It makes me think about what happens if you mix, AI agents with the functionality of Amalgam. Like, I'm not as sophisticated a trader as some folks out there, but I wish I was. And I wish I could just tell an agent, hey, I have a 70% conviction that Ethereum is going to go up by 20% in the next 2 months, but I want to hedge this bet in the most optimal way possible to reduce my downside risk to no greater than a 5% loss of my principal. What do you recommend with Amalgam? And it feels like, we're just about there, where your product plus some AI can help me do that, where I don't maybe have to know all the nuances of how to do these more sophisticated trades, but I can get the same result.
Absolutely. I mean, we have a strategy that would fit that need that you described exactly, right? It would be something where you're borrowing some liquidity, but you're also long ETH, right? And putting that combination together the borrowed liquidity would hedge your downside on your downside exposure, and the upside would actually get exaggerated. The more up it goes, the more green you are, right? And so that's it's a very dynamic product for that purpose. You really can create very interesting payouts, and whether it be AI or, even I think a lot of what we're doing is realizing that maybe not the entire market's ready for that. And so we're working with curators right now to create custom vaults that sort of abstract away that all for you. And we just say, hey, this is a strategy that does this, that, or whatever. And then people can look at the performance themselves and say, am I excited about this? They can read about the risks and they can make the decision. And maybe eventually AIs will just make that decision for them. Yeah.
Yeah, it's fun to think about this stuff, and I'm very excited about your upcoming launch, and I know how much work you've put into the product and building a community of active contributors that are not only using the product, but really it's a two-way exchange. So kudos to you, and best of luck with your upcoming launch. As we sort of look ahead, post launch, post integration, uh, you think about sort of your long term vision for what Amalgam could become. What does success look like for you 2 years out?
Yeah. I mean, 2 years out, what I want to see is that we've taken some of our hypotheses about how this product will perform. Some of those hypotheses include better capital efficiency, right? The other ones include, making it easier for less sophisticated traders to perform more sophisticated strategies by making a very informative UI that helps them understand the risks that they're taking. And, seeing all that play out, right? And I think at the end of the day, it's sort of the simplest metric is numbers go up, right? And seeing TVL explode and seeing seeing potentially our token, really blowing up. And but then also I think on the more product side is just taking whatever we learned from this launch and being able to um, you know, see where the market responds and where it doesn't, and see how we can keep fine tuning and improving to make the best product that we possibly can make.
Yeah, well said, and good luck with all of your adventures in terms of the next few years. You're going to be busy.
Thank you. Yeah, absolutely.
Hey listeners, are you ready to amplify your voice in a digital world? Introducing .podcast domains, your gateway to the future of online identity. Whether you're a creator, a company, or just someone with big ideas, .podcast is for you. Own your unique digital identity, connect securely, and explore hundreds of apps with no renewal fees. Don't wait for someone else to claim your name. Secure your .podcast domain today and be part of the next generation of content creation. Visit get.unstoppabledomains.com/podcast to get started. Again, that's get.unstoppabledomains.com/podcast. Your voice, your rules, your identity.
Well, since you've been feverishly beta testing, do you think you're open to giving us a sneak preview of what's going to be launching soon?
Yeah, I'd love to. That'd be really cool.
All right, let's do it.
Okay. I'm gonna share my screen right now.
Okay.
You seeing the screen share?
Yeah. Yeah, if you could zoom in a tiny bit, that'd be great. Perfect.
Okay. Yeah, so I mean, this is the DApp. We tried to really make it inviting and get people excited. So there's a little bit of a design touch. We
We
it's
got a
actually
mountain range here, folks, and There's a bright green lend arrow and a bright red borrow arrow.
Yeah, which this is a little bit funny, but one of the first design conversations I had was about, the northern lights with mountains in the background that were snow capped, right? And we kind of missed it with the first designer. And then, funny enough, our second designer took a crack at sort of really designing both the landing page and the UX. And he had two iterations, two versions. And this was one of them, completely unrelated to me asking anything. And he presented this to me, and I was like, this is exactly what I told a designer a year ago I wanted. So anyway, funny story, but then we have some pools that you can interact with, right? And, right now we only have a few, but, I can go to this USDC Bitcoin pair. I just kind of clicked on that row and it gave me a view of the pair that's more detailed, specific to that pair itself. And it gives me an exchange rate that I can, pick to denominate in Bitcoin or USDC. So, and then each of these three rows are divided, into two columns. So we try to design this similar to, I think, well-known DeFi protocols where you have like a deposit side on one side and a borrow on the other. You do need a deposit before you borrow, so that you have collateral. But one of the things that's really interesting is that you're not necessarily always depositing one asset and borrowing the other. You can do that, but you can also borrow against the market making position itself, or borrow the market making position itself, right? And that sort of presents the whole impermanent loss versus impermanent gain. So you had kind of mentioned being long, one asset with downside exposure. The best way to do that would be to, just start with some USDC and deposit that. I'm going to do some approvals in my wallet. We are working on reducing the number of click frictions on this. But in the current design, it's a little bit still a little bit clunky with the approvals. So still work to be done.
So,
Actually, something we're doing.
So Will's depositing $1,000 of USDC and confirming that transaction. And immediately what appears is the net API, which is 6.94%.
Yep.
And I guess what needs to happen to show the LTV?
Well, right now there's no loans, so that's why.
I see, loan to value ratio, right?
Yeah.
So
if I
right now
borrow,
you're just borrowing and you're getting a yield of 6.94 on USDC, which is not bad.
yeah. And so now the max it's allowing me to borrow is I'm actually going to borrow something. I'm not going to borrow one asset. I'm going to borrow the market making position, because I think that is a little bit more interesting. If you notice on the borrow side,
what does that actually mean?
Yeah.
Like, what in layman terms, you're borrowing USDC, WBTC. What does that actually mean?
Yeah. So basically there's a market maker on the other side of this that has this exposure where they're market making like they would on Uniswap. And when I borrow this position, basically what I'm saying is like, hey, I'm going to take your market making liquidity that you're supplying, and I'm just going to burn it. And I owe you back some USDC and some Bitcoin, but that amount might change, and it's going to change by the actual exchange rate. And what this means is that, when you're market making, you're always in this position where you're buying the asset that is going down in value and selling the asset going up. When you're borrowing the market making position, you're always buying the asset that's going up in value and selling the asset going down. But this is an AMM, so this is happening automatically, right? And so basically that's what this allows for me to do, is to have that exposure. And so,
That's the secret sauce behind the product.
exactly. And so right now at the current exchange rate, which this is on testnet, but I put in 1,000 USDC. I click this row for the USDC Bitcoin to borrow, and it allows me to borrow up to 414 USDC and 4 thousandths of a Bitcoin. I don't know if that's really the right price, but this is a test net. And so depending on how much I risk I want, maybe I'll just do half of that. So as I put in 200 USDC, it auto calculates what the appropriate amount of Bitcoin to borrow would be. I click borrow. It's going to actually, I think, require me to do some approvals again. I don't remember exactly, or maybe not. Actually, it's just I can borrow directly. So that transaction confirmed. And now I have, this net APY of 6.8, a loan to value of 39% because I didn't max out, how much I could borrow, and a total deposit of 1,000 USDC and a total borrow of, 396.
So essentially, are you, instead of getting an API or APY on 1,000, are you now able to get a APY on 1,400? Like basically, you're sort of increasing the yield impact of your $1,000, or is there something else happening there?
A little bit different because the APY on what I'm borrowing is actually working against me. So my $1,000 is 6.9, but my net is 6.8. And that's because right now the cost for borrowing.
So you're hedging. It's more of a hedge.
Yeah, exactly. And the other thing is that I got that USDC and Bitcoin. So although I put in 1,000, I took out 200. So if I wanted to go put in that 200 again or loop this, I could. Actually make a larger position than the assets I actually have exposure to, rather than so it's loop. You can loop it as well.
Really cool to see such an elegant solution for a very sophisticated type of trading. Anything else you want to show us?
Yeah, I think this is sort of the a la carte menu, and I think the more interesting thing to show people is when you put these things together in one transaction, and the tools that we've created around what we call the DeLEx interface, trying to kind of give that word multiple meanings. Not only is it decentralized lending exchange, but DeLEx sort of, is like playing on the deluxe version. And so this is more of a sophisticated interface that allows you to pick between multiple strategies. Say I want to have a straddle where I want to make money if the price goes up or down, or maybe I want to market make, but I don't want exposure to both assets. So that'd be like a delta neutral market making position. These different aspects are just sort of a hint. Like we can almost create anything here. This one doesn't want me to show this because I have opposing exposure already. So, and when I create these different strategies, the idea is we wanted to make an interface that was very informative so people could really take the risks and the rewards of what they are doing and really understand them before they did it, right? And so here, this is showing that if the price changes by a negative 40%, that I'm going to lose 2.5% of my portfolio, right? If I do, like, say, a leverage straddle, we could have exposure where if the price goes up by 25%, that my portfolio goes up by 3 or 4%, right? Or on the downside, if it goes down 40%, I make 12%. We also have an interface of the heat map, and the heat map is meant to show people sort of what happens to this position over time. So we take a payout chart and we take the days or the time as the x-axis, and the price change is the y-axis. And you can almost like start from the left side and draw a price chart in here of where it's going to go. And this helps give context to what's going to happen in a day, a week, or a month time frame. And in this case, these straddles are expensive because you're paying a fee for them. And whereas if you're delta neutral market making, the exposure is inverted, right? So you're like, the price could go up, significantly or down significantly, but if I'm in it for, 900 days, maybe I don't care, and that this is going to make sense over a long enough period of time. And
so if I believe that Bitcoin is ultimately going up, but it could have a couple major downturn moments, not financial advice, but I want to sort of compound the upside and reduce the downside risk. What would be the strategy you'd recommend?
I mean, you probably want to do like some sort of long market making. This might not give me all the viewpoints because I got to close my existing position. Maybe should have showed this first. Let me go to a different pool and show this. Let's just pretend this is Bitcoin for a second, because the view is the same. But if I want to do like a long market making position, this would allow for a longer view of basically having exposure to the upside while also like stacking yield continuously by sort of being able to take advantage of the ups and downs, and sort of trading in and trading out and collecting swap fees against your position.
Very cool. I'm gonna have to hire you, Will, for an advanced trading school educational degree at some point after my event when I have a little bit more downtime. But fortunately, come December I do. So I'm looking forward to take advantage of this product. Great work, and it helps to sort of see the design that in action with the final product.
Awesome. Yeah. Well, thanks for letting me show it to you and for chatting with me about it.
Well, thanks for spending all this time with us and breaking down what you're up to and where DeFi is going. If folks want to learn more about Ammalgam and get involved in your upcoming launch, what are the next steps you'd recommend?
Yeah, I mean, all the information about how to get involved is going to be on either our website. You can follow us on Twitter. Both of them are Ammalgam. And we spell it a little bit different than the traditional spelling, is because we incorporate the AMM. So AMMALGAM.XYZ, or that same handle on Twitter. You can follow me at Dueling Galois. That's based on my favorite mathematician was Galois, and he died in a duel. So Dueling Galois. And yeah, from there you can join us on Discord. You can see our docs. You can use our app. You can learn more about our community. We have a newsletter that you can join, a bunch of different ways depending on what level of engagement you want to get involved at.
Great stuff. Thanks for hanging out with me today.
Yeah, thank you.
We've reached the outer limit at the Edge of Show for today. Thanks for exploring with us. We have room for more adventurers on our starship, so invite your friends and cool strangers to join our journey. If you're among the hundreds of thousands following us on Spotify, iTunes, iHeartRadio, or watching us on Myco or YouTube, please hit that subscribe button, rate us, and make an awesome comment too. And don't forget to pass this episode along to a friend or two who would benefit from it. Doubling back to again, recommend checking out myco.io, where you can watch The Edge of Show and earn for your time and attention. That's myco.io. Don't forget to visit theedgeofshow.com. The is part of the domain name, where you can learn more about collaborating with us and also subscribe to the Edge of Weekly newsletter for the latest Web3 news, events, and show drops. In addition, connect with us on all major social platforms by searching for The Edge of Show. Join the exciting conversations happening online. Lastly, be sure to tune in next time for more great Web3 and AI content. Until then, keep pushing the boundaries. Thanks again for hanging out with us today. The views and opinions expressed on The Edge of Show reflect solely those views and opinions of the show host and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of these links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.